Welcome to today's episode of Empowered Divorce Decisions, where we share the information and resources you need to know to make good, informed decisions in your divorce and move forward in your next chapter with confidence. Today, we're talking about the property report, sometimes known as the asset and liability report, and sometimes known as the net worth report. I'm Elina Cannon. I'm a private wealth advisor and a divorce financial planner at Argent Bridge Advisors. And I'm joined today by my lovely colleague, Jamie Blum. Hey, Jamie.
Hi, Elina. Thank you. I'm Jamie Blum. I also work at Argent Bridge Advisors. I'm the Director of Divorce Financial Planning and Litigation Support. So welcome.
So, Jamie, would you kick it off for us by just sharing the importance, the relevance of the property, the asset liability report in the divorce process?
Absolutely. So we put together a property statement and we also put together a cash flow report. Those are the two main reports that we work with a lot with people going through divorce. Today, we're going to talk about the property report, which, as Elina mentioned, is assets and liabilities. And it's important to gather this information because you need to know what you have and you need to know what needs to be divided or shared in this divorce. And so here we're showing a sample report that we have. Our sample people's names are Mary Sample and John Sample. And what we're showing here is we have the different categories of assets. So we start with real estate equity. We have cash and investments, businesses, cars and personal effects, life insurance, retirement accounts, which include pre-tax and already taxed accounts, and then pensions. And then we also list what we'll say is down below any debts that there may be. It could be student loan debts, car debts, things like that. And then we also list separate property assets. And we'll talk about what separate property is in a separate video that we will show you and talk a little bit more about how that works. But going back to the top, we'll start with, what we need to look at and gather and how we provide this information. So for real estate equity, in this case, they have a marital residence and they also have a beach property. So the marital residence here is noted as Marital Home Lane and the beach property is noted as Beach Way. And what it's showing here is we have to look at the value, and the way that we value it initially until it's agreed upon, how the two people are going to value it is we'll look at, what is the average between Redfin and Zillow. And so, we can get an idea of what that might be worth. But at the end of the day, there could be other options like doing appraisals or competitive market analyses or just agreeing on a value. We also have to look at how much mortgage amount is left on the property. And the value of the property less the mortgage amount is the equity in the home, usually. In this case, there is a separate property component that is reducing the marital equity value in this case. So you can see that one of the spouses contributed $100,000 of separate property. So that's why we're noting that here, because what this is showing is marital assets and marital equity. Same thing on the beach property. The beach property is estimated at $1 million. There's a mortgage of $500,000. So the equity there is $500,000. And it's important in today's world to understand what are the interest rates on it, how long is the mortgage, are both people liable for the mortgage, and then also title. Title is important to know for every single asset because we need to know whose assets they are and know whether or not if one person is keeping that asset that the other person needs to relinquish ownership of that asset. Next, we get to cash and investments, and that's where we list all bank accounts, including checking accounts, savings accounts, and any brokerage accounts. We also have in here what we call restricted stocks. So we also include what we call executive compensation. It could be stock options, it could be restricted stock units or performance stock units or something like that, that we would consider some type of executive compensation. And here we can see the title J is for joint. So it means that both Mary and John are titled on these accounts jointly. And this is the amount of money that they have in that account. John is, for the JS, is titled, it's only titled to him. And his restricted stock right now, from our calculations, is worth $900,000. So we total that up as its own category. And then we get to businesses. Now, Mary owns her own consulting business, and right now we have a placeholder of 0. We then need to determine, is there a value to the business? And we will go into that more on a separate video. But for today's purposes, there's a $0 value because that is where it is today, and likely would stay that way because in this case, Mary is a sole proprietor, and the business is her business really does not have a value to be split in a divorce. Then we go to cars and personal effects. What we can see here is that Mary is titled on her car, which is the BMW, and John's titled on his car, which is the Tesla. Great. If they're both keeping their own cars, then at least title-wise, nothing needs to be done. For the wine collection, we consider that a personal property or personal effects. And in that case, we tell people, how do you want to divide up this property? You don't necessarily need our time and experience on that. And we'll give them ideas of how to do that. So Mary and John, maybe one of them is more of the wine aficionado. Maybe one of them is going to keep the wine collection and offset that amount with some other asset. Then we look at life insurance. There are several types of life insurance. There's term life, which most people, have an understanding of. You buy life insurance for a certain term. It does not have a value unless somebody dies. So that's why there's a 0 here in the value column. There's a death benefit, but it doesn't have a value if somebody stopped paying on it today. Other types of life insurance may have a cash value. If it does have a cash value, we would list it here. And that is also subject to division in a divorce. Then we get to the retirement accounts. And here there are 401ks, which is an employer plan. There are IRAs, which are individual plans. And then Mary has a SEP IRA, which is her business's a kind of a private plan related to her business. So we look at that as well. These are all pre-tax dollars, and we want to make sure we categorize that correctly and make sure we understand who's titled on which retirement plan. In this case, we also want to understand what has more ease of transferability, resulting in the divorce if people are going to equalize or somehow equitize these accounts. And then we get to the benefit, the defined benefit pension plans. So here, a lot of people in this area, work for the federal government, World Bank, IMF, but also here John works for IBM. So another place that has a pension. And there is a value for his pension. Even if he's not retired today, there's a certain amount that John has earned during the marriage, and that marital portion of his pension needs to be valued. There would also be a separate portion to the extent that he has earned anything before the marriage or has earned anything after date of separation, if that matters in the state that you live in. So here we've put a value on that to be considered in the asset division. And then we get down to this $6 million amount that you see for total assets is the total amount of marital property. After that, we list all the debts. So here we see that Mary has a car loan, and her car loan, the outstanding amount is $40,000. And so now that's reflected in the balance of total marital property, where we see the $5,960,126. So we know that that is the kind of the universe of the assets and liabilities that decisions need to be made upon, and what needs to be divided related to this divorce. Down below is separate property. And as I mentioned before, that's kind of different. Normally people are keeping their own separate property, and that's what they're each keeping. And we list it here so we know what they have. Elina, do you have anything to add to that?
Just thank you, Jamie. I think you did an excellent job of describing all the components that go into the property report, or otherwise known as the asset and liability report. It's really helpful to have it all clearly laid out, so you really have that good understanding of what is in consideration, what is in consideration for equitable distribution if you're an equitable distribution state, and also to have a good understanding of what are those assets that you really want to prioritize. What do you want to fight for, and which assets are you comfortable letting go of to your spouse? So I think that this is a really critical exercise and very informative for making those decisions and helping you really start to understand what that next chapter can look like.
Absolutely.
Thank you, Jamie, so much. Thank you, everybody, for joining today. If you have any questions, reach out to Jamie or myself. Our contact details are in the video notes. And stay informed. Please subscribe to our channel. And we look forward to seeing you in our next video. Thank you.